One of the problems in an article we recently published on EBnet dealt with the tax season upon us, and an interesting phenomenon that affects most people is that they scurry around at the last minute, trying to get their things together, and it turns out normally to be a fair amount of chaos. So in order to overcome that, we've got Gareth Price here, who's founder of Cloudworks, to give us a couple of tips and tools on how not to scurry around so much and get your things in order. Gareth, good afternoon.
Hi Chris, thanks for having me. So what is really important about tax season is to not take the head in the sand approach. Tax season starts on the 1st of July. It happens every year. It happened last year, it happened this year, and it will happen again next year. So it's important to know that it's going to happen and prepare for it to happen. Okay? It shouldn't be a surprise anymore. And the reality is that SARS has actually tried to make this even easier for us to do A, on time, B, accurately, and C, well. The most recent thing that they've introduced is the auto assessment. And that really is exactly as the name says. They will automatically complete and assess your tax return for you, which means they pull the data from all the different sources, compile it, and submit it for you, and then send you a notification saying, we have auto-assessed. Please review it. If you are happy with that, you don't need to do anything else. If you are unhappy, then please indicate as such and resubmit. Okay? So if your life is relatively simple, you shouldn't actually have to do anything at all. There is one very important thing here, is that there is a 40-day period from when the auto assessment happens to when you may no longer dispute or amend it. Okay? So make sure that you attend to that notification immediately. Because if you find out in 50 days that actually you should have got a bigger refund, it's going to be too late.
Fair enough.
Yeah. The other thing to remember is that we are now in 2022, and SARS can talk to all the institutions. So in the past, you would have to file and collect all your papers, okay? And the bank would send you a certificate, and the retirement annuity would send you a certificate, and this investment would send you a certificate, and you would have to file and keep these things until tax season. Now, absolutely everything that comes from an institution is fed directly to SARS. Your IRP5, your medical aid certificate, your retirement certificates, your interest, all of those things are automatically loaded onto e-filing for you. So all you have to do is log on and see them there. So now you don't have to put it off because you know you're going to be trawling through your email inbox trying to find that one certificate from who knows where. It's there on e-filing for you. Just log in, have a look at it, and submit. Another really important thing is that you can't forget about the income from your rental property or your side hustle. SARS is not going to know about it, okay? Because that's just you, and there's no institution that's telling them about it. But it is still your obligation to declare that income. And if it is found out that you haven't, there are significant penalties that can go all the way up to 200% of the tax payable. Now, you really do not want a 200% penalty for regularly and willfully under-declaring. Okay? And the excuse of, oh, I didn't know, or oh, I forgot, doesn't actually fit. So if you are earning income from another source, you've got a side hustle, you're renting out a property, you have to declare that. The next very important thing, and this has become much more topical in the past 2 years, since everybody has been working at home, is the home office. Now, the rules have changed as a result of many more people working from home. But what used to happen in the old days is you used to be able to have a sort of thumbsuck estimate of the size of the office that you were using. And generally people went for 30% because that was a nice big number and it allowed you to get a nice big refund. But eventually SARS cottoned on to that. And let's be honest, your office is not 30% of your house. Okay? So now what they do is they say, if you are going to claim a percentage for your home office, not only do you need to approve the expenses, so you need to show us the interest, all the rent, all the telephone electricity, you've got to prove that has been paid. You've also got to prove the size of the home office. Okay? It's not just a 30% thumb suck anymore. It is present us with a floor plan of your house that indicates the room that you're using as an office, so we can see that it is a specific room. It is not just the dining room table. And we can see the size of that in relation to the rest of your house. Okay? If you're not able or willing to provide that information, and you submit it and you get audited, that claim is going to get kicked out. And they could very well say, because you claimed something that you couldn't prove, we will add a penalty onto it. So, by all means, claim it, but be prepared to prove it. Okay? The attitude that you need to go into this with is, if I'm going to claim it, I've got to be prepared to prove it. Okay? Lastly, I'd like to address this idea of a tax refund, because everybody gets very excited about the tax refund. And I've had some very unhappy clients who said to me sort of a year after I've had them, but you didn't get me a tax refund. The last guy got me a tax refund. Okay? A tax refund is not a good thing. It's not you getting money back from SARS that wasn't yours already. What a tax refund means is that you paid too much money to SARS. It means that money that could have been sitting in your bank account has been sitting in SARS bank account. And you've only found that out many months later and received that money back. So I would much rather have a situation where you get a very minimal or no refund at all, because it means that you have not paid any more than you have to. And the money has been sitting in your bank account for you to invest and earn interest on, rather than sitting in SARS bank account where you don't earn anything on it. So yeah, I'm never madly excited about the tax refund. Some people use it as a sort of sneaky savings account. Knowing that if you get a couple of $1,000 in your bank account every month, you'll spend it. But if you can get 10,000 Rand in one go, you tend to do something a bit more intelligent with it. Cool, do that. But be aware that you are taking your money and you're putting it in SARS bank account. You're not getting anything special. You're just getting what was yours.
Fair enough.
And what you have over. Does that make sense?
Absolutely. Gareth, another question quickly. What about the sort of medical expenses and RAs and things like that? Clue us in a little bit about what's best to do in those situations.
Right. There are a couple of things that go into that. Okay. The first thing is, if your employer is making a medical aid contribution or a retirement annuity contribution for you. Okay. Now, if they are making the contribution for you, they are obliged to take that into account on your payslip. Okay? Which means they work out the tax deduction and they deduct the correct amount of tax from you every month. If you are making those payments yourself, your employer won't know about it and won't be taking that into account. Okay? This is actually what drives your refund, because if they knew about those contributions, they would be taking this tax off. Now, if you are making the payment, the employer has no obligation, but they may, at your request, take them into account. So, if you would like more money in your bank account at the end of the month, go and ask your employer and show them the contributions that you are making to your retirement and your medical aid, and ask them to include that in the payroll calculation. Okay, it'll mean you get more money on a monthly basis, but no tax refund at the end of the year.
Fair enough.
The other thing to remember is that when you contribute to a retirement annuity, a provident fund, pension, that reduces your taxable income. So the government is almost paying you to make that contribution. Okay, a quick example here is, if your taxable income is 100,000 Rand, and you take 5,000 Rand of that and you invest it in a money market, you will pay tax on it 100,000 Rand. But if you took that same 5,000 Rand and put it into a retirement annuity, you would only pay tax on 95,000. Okay? That's very important, because you will end up paying less tax.
Fair enough.
There's one other thing that's very important about medical aid or medical contributions here, is that one, you get a medical aid tax credit, but also you get to claim your out-of-pocket medical expenses. Okay, so those are the things where you have to go to the doctor, you have to go to the chemist, and your medical aid doesn't pay. Now, a lot of people think this is a free-for-all. Okay, this does not mean that if you pop down the Pick and Pay and you buy a Compra, that you can deduct it for tax. Okay, I've had people try and claim hygiene products and Baroccas and every little medicine that they want to take. The kid had a runny nose, so I bought a Medlin. Okay. Firstly, this only works if you have a prescription.
Right.
Okay. You have to go to the doctor and you have to get a prescription. You then have to pay for it out of your bank account. Your bank account, not the husband or wife's bank account. Okay. And you have to be able to present both of those things. Okay. But even then, you don't get everything, because there is a whole formula that is going to take into account how much you contributed to your medical aid, how much you have earned, how old you are, and work out how much you can actually claim. Okay. Now, by the time that has been done, we have whittled out the day-to-day spending that everybody does.
Sure.
Okay. Pop down the chemist to get some medicine. You get a bit of a cold or a flu. You go to the doctor. You get an antibiotic. That's not going to end up being claimable. Generally, what is going to come out the other end of this formula and be claimable is when you are sick. And the sort of sick that when you recover, you are going to tell people about how sick you were. That time back in 2022 when I had. Okay? You are going to be sick, and it is going to be an unpleasant experience in your life, and that is what you are going to end up being able to claim for at the end. It is not the run-of-the-mill medicines that you're going to find in your medicine chest.
Gareth, thank you very much. That was really interesting, very good advice, and really thank you for your time.
My pleasure. Thanks for having me, Chris.